Popular e-cigarette maker Juul is pulling its popular fruity flavors from retail store shelves in an effort to try and reduce use by kids and teens. The company will continue to sell tobacco, mint, and menthol flavors. Juul says that it will halt the sales of the fruity flavors until retailers can install technology that actually scans a buyer's ID to verify that they are at least 21 years old. Until then, those flavors will only be available on Juul's website, which uses an age verification service. The FDA has threatened to crack down on e-cigarette companies unless they find a way to actually halt the rise of popularity of their products when it comes to kids and teens. And the FDA has been very harsh in its pushing of this. We've talked to Scott Gottlieb several times about this. The FDA even raiding Juul earlier this year to go after some of their marketing materials and see what they were doing.
And separately, U.S. shared office space provider WeWork now securing an additional $3 billion in funding from Japan's SoftBank. This according to a Reuters report. I can confirm that news as well. The value of the company now $45 billion with a B dollars. WeWork announced a $500 million funding round back in July, which included SoftBank. Back in October, there were reports that SoftBank was in talks to buy majority stakes in WeWork. It went from a $20 billion valuation to a $45 billion valuation. A lot of real estate folks have been waiting for this company to fail. I actually made an argument in a column yesterday that WeWork is now almost too big to fail. They're the largest tenant in New York, London, and Washington, D.C. And when and if these long-term leases they have with these short-term customers go bust, there was always a view that the landlords would kick out WeWorks. I actually think that's no longer the case, because what's going to happen is the landlords are going to turn around and say, the commercial real estate value in New York City would plummet if WeWorks goes out of business. They're going to renegotiate these leases or turn them into some kind of like Marriott-style management company. There's been a lot of talk, though, within the real estate business about what ultimately happens to WeWorks in a downturn.
We talked with Sam Zell about this on air when he was here guest hosting that day.
I think I was traveling.
You were out that day.
Yep.
WeWork is an interesting position, and he went back and said the first time he remembered a WeWork-like business being there was back in the 1950s. He's watched it happen again and again, and every cycle that it went through.
Right. There's been a bankruptcy.
They fail, and they go down because they are the margin buyers, right? That these are the guys in an up market. All of them can flourish. In a down market, they're the first ones to go. I've talked with a bunch of other people about that, too. But we did have a conversation with Zell about it that day.
It's a fascinating one. There's a lot of people waiting. They're licking their lips, hoping that they fail. But I have to tell you, I'm now more and more convinced, also now with the backing of SoftBank, given the amount of cash that they have, they might be able to actually deal with the downturn in a way that the Reguses of prior years were.
I'm still skeptical.